Good morning, everybody. Happy Friday. Morning, Zeba, Josh, Safia. Who else is in here this morning? We got a couple of you. Jim K. Good to see you guys here this morning. Hope everybody's doing well. NG, nice to have you. Good morning, Daniel, Jason. We got the cool kids here today. I love it. Every day, right? That's what we do. Guys, welcome to the education room. Good morning, Ron C. I thought of you this morning when it said that it feels like 9 degrees here. Ron, for some reason, I was mad at you. Just wanted you to know that. You and your dumb perfect weather. Good stuff. Guys, my name's Mark. I'm going to be here for the next 3 hours, and we're going to talk about rules. We're going to talk about patterns. We're going to talk about developing a plan. The one part that I've omitted for the last few days, we've spent a lot of time looking at the live markets. We've spent a tremendous amount of time looking at your pictures, which I love. That's exactly what this class is for. Today, as we go into the weekend, we're going to talk about the concept of writing a plan for ourselves. Creating a foundation is really the focus for today, guys. And what's a foundation? A foundation is just that solid platform, right? Those base principles, those things that carry you to the next level. Nexgen provides indicators, right? And that's exactly what we do is we provide indicators, and then I teach you how to discern what those indicators are telling you. It's going to be your job. Good morning, Luciano. It's going to be your job to figure out what feels good, to figure out what's comfortable, to feel, to figure out where your brain is the happiest taking trades. Good morning, Sam. And we'll explore these options today, but I want you to know that when you create a foundation, when you really focus on getting that base knowledge, everything else kind of works itself out. We see so many different types of trades with next-gen users, and nobody's right and nobody's wrong. It can only be right for you. So build the foundation and you will grow. All right, there's my little soapbox for the morning. Bum, bum, bum. Forex Factory, guys. Did anybody watch the S&P at 8:30 when that news broke? Boom, bounced everywhere, didn't it? Got erratic all over the place. I took a picture just in case you guys didn't. That's 8:30. All the way to 8:30, guys. Boom, 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 everywhere. And then it sorted itself out after a little bit of craziness. So stay out of the craziness, right? Hey, good morning, Christina. Nice to have you back. Guys, I tell you, I get excited when I see new users. I get excited when I see demos. And when I see you guys coming back and feeling comfortable posting in the room, because, ready, let's share a picture with you. I'm going to share a lot of pictures today, guys. I'm going to go off the beaten path. Good morning, Dave B. Sam, it was 0.6 instead of 0.4. The only thing that means to me is that there was a 0.2 difference. I don't even know what the PCE is. But I do know that it was high impact news, right? And that's what we're going to do is we're just going to check news, high impact. I'm going to stay out of the way. And there is a little file cabinet right here where you can see what it actually is. Guys, when I say I don't know what something is, I do. I go through and I look and I read it and I do all that. But the reality is it's not a matter of what it says. It's a matter of the impact that it can have on your trading. And those high impacts, and guys, even this medium impact, 10 a.m., may have an adverse effect on the flow of the market. It may change direction rapidly. It may spike. So being aware each morning of the news just puts you in a position to where you can go refill a cup of coffee, grab some more water, go throw the stick with the dog for a few minutes, let it sort itself out, and then you can get back to business. And I posted this picture up. I'm going to pull it up again, guys. As we go to the tutorial section, as we go to the education page, there is a very simple path to becoming a confident trader, guys. Post your trades in class. Track your trades in a performance spreadsheet. Track your real-time performance in the spreadsheet. And guys, this is a recipe that has been around forever. For as long as there's been a class with Nexgen, this has been the path to success. And it starts with posting your trades in class, getting feedback on each and everything that you do. Guys, when you do this, I'm going to talk about what you see. I'm going to talk about what I see. We're going to work together, and we're going to get you in a position to where you begin to recognize patterns, not only in the market, but also in yourself. And then the second thing is using a spreadsheet. And we're going to talk about taking pictures. We're going to talk about getting them into the spreadsheet after we talk about rules. But I want you guys to embrace this concept. Become active in your own education. Participate in your own education. Take advantage of the time that you have in this classroom, and then take advantage of the tools provided to you so that you can study outside of the classroom. Here's a spreadsheet. This one's mine. When I take a trade, I track it because I want to go back and study it and see what I did. When I see a look that's amazing, that fits my rules perfectly, I log it into this spreadsheet so that I can come back and study it. When I see things that can help me hold on for bigger moves, I chronicle it. When I recognize patterns over and over, guys, there's sections for all of this, and all of it's directed to get you to becoming a chart reader, to get you to where you can read charts at a moment's notice. And all of that comes from the tutorial section. Guys, notice the URL, building a foundation. There's that word again, building a foundation. Giving yourself a core set of knowledge that's going to teach you to read your charts. That core set of knowledge that's going to put you exactly where you want to be. And the easiest way to do it, guys, the path of least resistance is to allow it to be simple in the beginning. To allow it to just be a couple rules, a few rules on 2 charts, and really focus on your entries, guys. And focus on the entries for 30 days of the high probability trend trade. Because the high probability trend trade, focusing on those 5-1 trend trades that happen after a termination condition, guys, this is your highest probability trade. This is a trade when every indicator on every chart, straight from the definitions here, each indicator on every chart agrees with the rules for the trade. This is going to be your strongest triggers, nothing in the way, and a clear path between your entry and your target. Guys, we're going to focus on this. We're going to talk about the rules. We're going to talk about the looks associated with the rules. And we're going to focus on entries. And you're going to focus on entries for 30 days. Because if you do that, you're going to become a chart reader. And guys, believe me when I tell you, your goal as you build a foundation shouldn't be to be a successful day trader. Your goal should be to be a successful chart reader, to be able to look at your indicators and understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. The indicators that you get through Nexgen are going to help you do that. This classroom is going to help you do that because 90% of what you do is going to be reading your charts. 90% is going to be waiting for advantages to be fulfilled. And then when they are, that 10% is going to be entering the market, taking the absolute best of the best, making sure that you're getting it at the right spot because the right spot provides easy management. So guys, give me a Y in the room if you're with me. We're going to focus, we're going to build a foundation, and we're going to look for a high probability trend trade. And it's 3 simple rules. And let me warn you in advance, you're going to go from simple to complex to simple to complex, and your brain's going to mess with you. But if we build that foundation, you always have something to come back to. A trade is 3 rules, guys. It is the large chart needs strong triggers and no termination conditions, and then a small chart provides an entry. And there's an equation. A trade is nothing more in the beginning than momentum plus a clear path plus an entry area. And remember, in the spirit of keeping it simple, we're going to take those 3 rules, and you're only going to use 2 charts initially, in the beginning, as you start to grow with the software. Your large chart is your 13-2 chart. This is on the left side of your screen, and you're going to use 1 bar. Only 1 bar, and you'll be able to determine so many things. You'll be able to determine the overall trend of the market. If the background on that 13-2 chart is green, New users, you should only be looking for trend trades long. Trend trades with the direction of the trend, obviously, right? If it's red, we're in a downtrend, you're only looking for rules to be met for short trades. Rule number one happens on the 13-2 chart, that advantage of momentum. Rule number two happens on that 13-2 chart, the advantage of no termination conditions, a clear path. And this broad stroke of the brush, guys, is giving you the overall look of the market. This is giving you the temperature of the market. And when these rules are met, when you have those first two advantages in place, you're going to come over to the 5-1, and this is your entry chart. And what you're going to do is you're going to refine that broad stroke of a brush. You're going to take that overall trend, that overall momentum. You're going to take that clear path, and you're going to be able to identify where the market is likely to continue, and then take advantage of that point as an entry for your high probability trend trade. And you're going to be able to pinpoint this with such accuracy that you'll use a limit order to buy or sell a pullback to an area inside of favorable large triggers. And this is going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And let me show you the refinement process. One bar on your large chart, guys, where we get that information of trend, where we get that information of strength, where we get that clear path. One bar on the 13-2, maybe 20 or 30 bars, 15 to 30 bars on your 5-1. It's a smaller chart, it's a faster chart, and what this does is it allows us to refine that entry point, to be able to get in where the market is likely to continue and to be able to find opportunities to get down to that next key Fibonacci area. So without further ado, I like to say ado, right? Let's go through the rules. Let's take a look at them. First rule says large triggers need to be strong, right? We have to have the advantage of momentum. Well, what does that look like for the new user and for the old user, I suppose? In an uptrend, when your background is green, guys, your small triggers will be above your large triggers. That's what creates that green background. Small triggers will break away from and accelerate away from the large trigger lines, and it's the space created between the two that lets me know that the odds are favorable for the market to continue up. I like the way that rolls off the tongue. The odds are favorable for the market to continue up. When the smalls break below the large, that background paints red, giving you that visual cue that you should only be looking for rules to be met for high probability trend trade short. Smalls accelerate away from the large. The large are wide, they're angled in the direction of the trend. Once again, that space created between the two lets me know that the odds are favorable for the market to continue down. Guys, you're going to hear me say it a million times in this classroom, and I'm hoping to see it written on every chart that you show me. OFM, odds favorable momentum, giving yourself that first advantage with the strong triggers. Because when the smalls return, we've weakened those triggers, and when we weaken the triggers, anything can happen up or down. You take away the advantage of a market with odds favorable to continue, and you throw it into a state of anything can happen. So guys, it's a pretty simple look. It's the separation between the two that provides the advantage. You'll look for your trades initially for that high probability trend trade from the point where they accelerate away until they come back and begin to weaken. Give me a Y in the room if you're with me, guys. Odds favorable momentum, the advantage to start things off. And you're going to see these tails on a 13-2. If I scroll back on my 13-2 and I see these tails when there's odds favorable momentum, guys, these are potential entries on a 5-1 chart, but we still have to make sure that we have a clear path. Small triggers accelerate. There's our window, right? This is when we have the highest advantage of success. These little tails represent potential entries, and you're going to use this as a study tool, especially going into the weekend, right? Because I know all of you are going to study this weekend. So rule number one, the advantage of momentum. Let's do this. Let's look at a live market. Let's see if we've had that. Well, that one kind of returned. This is the S&P, guys. I know that there's been options. There's that news. Oh, nope, that's just a big downtrend, wasn't it? Smalls outside. There's a tail. Let's circle it. S&P struggled a little bit this morning. They just pushed it down, waiting for news, right? Pushed it down, and then news hits right there at 8:30. Did we get odds favorable momentum somewhere? Not just yet. All right, so we're going to be patient. Here the smalls are outside of the large a little bit, guys. This isn't the strongest of the strong, but it's still momentum. So let's just hold off for a second, right? We've got our momentum. Maybe crude oil. There we go. Now they're playing nice. Smalls below the large are wide. They're angled in the direction of the trend. I'm going to circle a tail. Guys, this is a tool that I can use to teach me when I have odds favorable momentum. This is a tool that I can use to teach me to be patient when I don't, because there's going to be a gap in between the points where we have odds favorable and where we don't. Hey, good morning, Jim. So once again, give me a Y in the room, guys. All I'm doing is scrolling back and I'm looking for that momentum that says the market is likely to continue. And if I see a tail, if I see a wick, I'm going to circle it. Because when we talk about entries, well, that might just be an entry. That's probably enough circles on crude. So now we're going to talk about termination conditions. Here's a couple great ones that just happened. Price reaches support. How do we know not to go short in that downtrend? Well, this is an area that's likely to stop the market, the same as this resistance is. Recognizing termination conditions is going to help you identify a clear path. Guys, Fibonacci is unbelievable. It's a reflection of fear and greed. And if you spend any amount of time scrolling back on your charts and seeing how often Fibonacci stops the market, you will be amazed. What are the areas that we're going to look for termination conditions? And guys, I've got pictures for everything. I want you to know this. I'm trying to make sure there is no stone unturned. These are the areas that may reverse the market, guys. It can be a divergence high, a magenta divergence high, red resistance, yellow 1-to-1s. It could be a cyan divergence low, or it can be blue support. These are all areas that have the potential to stop the market. Notice that I say potential. Notice that I say may. We have to do a little bit of work to determine whether or not they will, guys, and it's a two-part process. The first thing that happens is price reaches an area, meaning those price bars come to Fibonacci support. Those price bars run into 1-to-1s. Those price bars run into Fibonacci resistance. Well, when price reaches any Fibonacci area, check the trigger lines. If it's an area of support and there's no trigger lines below the area of support, you've reached an area that may reverse the market. Not guaranteed to reverse the market, won't definitively reverse the market, but it may reverse the market, which means that if you take a trade into that area, you've just forfeited the advantage of a clear path. The rules say wait for an area to break. I'm going to take a picture. I work with pictures a lot, guys. I believe they burn images into your brain. Price reaches support, absolutely no trigger lines break through. I have no more short trades, right? I've lost the advantage of a clear path. When both my small and my large break through support, you'll notice that support begins to act as resistance. Guys, once again, we have the advantage of the clear path. We also have the advantage of odds favorable momentum. And if I'm using that little circle drill, right? That little drill to help me identify potential entries, well, that's going to be one right there with the advantage of momentum and the advantage of a clear path. So that's your basic recipe. How do I identify termination conditions? No triggers through, no trades into that area. It may reverse the market. Both small and large triggers through. The area is considered broken. Support begins to act as resistance. Resistance begins to act as support. So once again, guys, give me a Y in the room if you're with me. We're identifying when we have a clear path. There's going to be one more look that you're going to hear in the room all the time. And this look is when your large triggers stay above a Fibonacci area, but your small triggers have broken through with odds favorable momentum. And I'm going to give you this picture when I'm done. Smalls through, large knot, odds favorable momentum. Is everybody okay with the shorthand on that one? This is an area with the potential to break because of the momentum, because the small triggers are already through. But keep in mind, it has not broken. It's only potential. This is what we call a 50-50, guys, and not because you'll either win or you won't, who knows. It's called a 50-50 because 50% of your trigger lines have made it through that area and 50% have not. This is no longer a high probability scenario because we don't have the advantage of a clear path. But you're going to grow with the software, and when you see an area with the potential to break, guys, if the entry conditions on your 5-1, your smaller, faster chart are perfect, take one shot. This will be your first medium probability trade. But those conditions need to be right. You need to have every advantage because you've given up the advantage of a clear path. Does that make sense? And we'll look for do I mean break long? I don't, Jim. Anytime I say break, I mean that my trigger lines have gotten to the other side of an area. And that's it. I'm not talking about longs. I'm not talking about shorts. I'm only talking about areas with either the potential to break, and here's a good example. Price reaches resistance. Absolutely no trigger lines have broken through the area. None have gotten above. So, Jim, we identify this as a termination condition, right? And this is the live market right now. This is crude oil. Here, the small trigger lines have broken through the area, but the large trigger lines have not. This is an area with the potential to break, but it hasn't yet broken, meaning that the market could still reverse. If there's an opportunity, we want it to look great on the 5-1. And then as the market continues down and those trigger lines work their way through, when my large trigger lines and my small trigger lines are through an area, do you notice how Fibonacci goes from blue to red, from support to resistance? And the same for these 1-to-1s. As we come down and all of my trigger lines have broken through these 1-to-1s, guys, now we have the advantage of a clear path. Does that make sense? Absolutely no longs. Area with the potential to break until the trigger lines get through, and now it's broken. And now when everything's broken and there's nothing in the way, guys, we have a clear path. Hopefully, if some of you are short, to get to that next key Fibonacci area. We're identifying where the market is likely to stop. We're also identifying where the market is likely to go using Fibonacci. And the only thing left to do, guys, is to identify where the market is likely to continue. And that's going to be our entry points. But let's look through a couple more terminations just to kind of, get you coming. So, Jim, I'm going to give you the Sunday school answer first. I would have gone short when my rules were met. And that's the only time that I'll go short. And I want you to remember that, Jim, this class is designed to give you a foundation to teach you to read your indicators. But I'll tell you, let's see. If I had to guess, there are clients that went short somewhere right around here. And there are clients that took profits somewhere right around here. And that's not a high probability trend trade, but what it is, and Ron C will probably show us a picture at some point, it's understanding the advantage of momentum, understanding the advantage of a clear path. And some people, when they have that great foundation, will create a plan that's outside of this high probability trend trade that I teach. Because the high probability trend trade creates a foundation. Good morning, new trader. And Jim, one of the things that we have to recognize, and this is tough, is that there's not always an advantage, right? The rules aren't always met. That clear path isn't always there. That odds favorable momentum always there. And then doggone it, Sometimes the entry just isn't there. But what happens, and Ron, thank you for this, is you begin to develop a plan outside of this foundation that I teach. You begin to find what's comfortable for you, and I begin to recognize patterns in you, right? I begin to understand what it is that you're doing, what it is that you're looking for, what it is that you're thinking of, and it gives me an opportunity to police you a little bit, to help you police yourself, to help you build a plan that suits your needs. Does that make sense, Jim? How did I know Ron was going short right here? Because Ron's been studying. He built that foundation, and then he created a plan from that foundation to get himself comfortable. Awesome. Good morning, Mike. Disclaimer, class, Mike has been doing this for 9 years. Don't do what Mike does. Just kidding, Mike. It's good to see you this morning. Everybody's going to have a different plan, guys. Some people like chocolate, some people like vanilla, some people like every flavor under the sun. You're going to figure out where your tolerances lie, but it all begins with the foundation. It all begins with learning to read your indicators, understanding where the market is likely to go, where it's likely to stop, and where it's likely to continue. Here's some of those likely to stop places. Price reaches resistance. Absolutely no trigger lines go through. No long trades, right? This is from 2021. This is a couple years old. Doesn't this look very much like this look? We're recognizing patterns. We're looking for opportunities in the market based on the patterns that repeat themselves over and over and over. Price pulls all the way down to support. No trigger lines break through, no short trades. Price pulls back to resistance, and this divergence high. And this divergence high means that there was a loss of momentum right at a key area. This is what we call a pivot stop out of a divergence high. And when price trades above that divergence line and then back below the magenta line, don't go long. And if Fibonacci resistance is there, guys, this is what we call a strong top. This is a termination condition that creates a full reversal. And if we look for opportunities after a termination condition that creates a full reversal, if our rules are met, guys, there's that high probability trend trade. I love this picture because I have odds favorable momentum. Absolutely, Josh. Odds favorable momentum directly into a Fibonacci area, right into these one-to-ones. All I have to do in order to not trade into this wall of support is say, where are the trigger lines? The trigger lines remain above. And look at the bounce created. It's not guaranteed, but you give away the advantage of a clear path. Well, when this termination creates a full reversal, meaning that the large triggers go from red to green, and then it gives me odds favorable momentum, there's another one of those circles that we talked about. Guys, this is the highest probability trend trade that you can take. This is a trade that typically wins 70 to 80% of the time if you go back and back test it. Your job is to study this look, to understand it, to get to a point to where you're comfortable taking it. So where the market is likely to stop, right? Where the market is likely to continue, where the market is likely to go. And once you have these basic concepts down, the world is your oyster. That's why we focus for 30 days on nothing more than looking for great entries. So pivot stop outs. You're going to see these a lot on the 13-2, guys. All right. Divergence creates a cyan line to the right. What does that mean? So a pivot is formed on your large chart. And guys, for those of you that are new, a pivot means that the market went down and then it went up. Or the other way, the market went up and then it went down. So what we have here, and I do like taking pictures of pictures, don't I? Josh in the moment and everybody, notice how the trigger lines are through the area, right? The smalls broke, the large didn't. It's kind of iffy, isn't it? It's not a real termination condition because the triggers broke the area a little bit. So what you're looking at here is just a pivot with divergence. That means that there was a slowdown in momentum when this pivot was formed. Is everybody good there? Not a termination condition, just a pivot? Cool. So here's the second half of it. Price pushes up, right? And then it comes back down, and now price reaches the divergence low. And if we go back to the rules, straight from the manual, a cyan divergence low line is one of the areas. Hey, good morning, Paul. Happy Friday. A cyan divergence low line is one of the areas where we're going to make that comparison. So price reaches the divergence low, extends a little bit. None of the trigger lines get below, and then look at it heading back up. So Josh, there's a pivot stop out from a low. The first pivot with divergence, in this case, isn't a termination condition, right? But when price reaches that cyan line, now it's a pivot stop out. But it hit the cyan line prior to the second. Right here, D? Are you talking on the left side? D, so when you come in and divergence prints, this divergence doesn't print until right here on the third bar. On the third bar, the calculation is done, and then this divergence line prints. This pivot looked exactly like that pivot until the third bar prints, and then divergence is true. So this cyan line isn't even there. And that's why it's just a pivot. But when it comes back and retests the pivot, when it comes back and price reaches the pivot and the trigger lines don't get through, now I have that pivot stop out. Does that make sense? And maybe there's an opportunity in the live market. So D, right now, I have the potential for divergence on a 13.2. It wasn't present initially. See how there's no cyan line here? If divergence is going to be true, I need 3 bars up, and then I'll get that line, just like I did on the 5-1. And let's see if it'll do it for us to give you a nice visual. Maybe not, because there's a lot of pressure to the downside. This is why we trade with the trend, guys, and why we don't form opinions. Jim, do you see support broke? Every trigger got below. It came back and acted as resistance. So the picture you had, would you consider... I would not, Josh. I would consider it. I would consider it nothing more than a pivot. It's just... Where's that picture? It's just a pivot with a loss of momentum. It doesn't become a termination condition until over here. Absolutely, I would, Josh. Watch this. Great segue. Fibonacci resistance holds, right? And I have divergence from that pivot. Guys, this is a termination condition not because of the divergence, but because price reached the area and none of the triggers broke. This divergence doesn't mean anything more than a loss of momentum. Nope. Josh, it's a termination condition because price reached the area Fibonacci resistance and none of the triggers broke through. Remember, this magenta line didn't form until somewhere down here. It was a termination condition long before that third bar. Does that make sense? The fact that the divergence prints, well, it adds a little fuel to the fire, doesn't it? Now I have a loss of momentum at a key area. I like it. A full reversal, odds favorable momentum. Yeah, that's a good top. That's a strong top, Josh. Right until it hits support and absolutely none of the trigger lines break through. So now I've got termination to termination. 90% of what I'm doing is reading the indicators, guys, waiting for that advantage. And then, Josh, this termination condition becomes a pivot stop out at Fibonacci resistance. When the market comes back and reaches that divergence high and the trigger lines can't break through, now we have a termination condition, right? Right to a termination condition, right to a termination condition, but now I can label this one as a pivot stop out because price exceeds, trades back below, the trigger lines don't follow. And Josh, one tick beyond that magenta line can be a pivot stop out. Does that make sense, Josh? So Josh, if a single trigger pushed through and then retraced, I love these questions. So let's see if we can find an example real quick. I'm sure we will. So if one trigger line breaks through, Josh, the large triggers don't, what kind of trade is this? It's a 50-50, right? I don't consider that to be quite as strong. Not as strong as when it hits Fibonacci support or resistance to the tick and reverses. There was some momentum pushing up through, and sometimes it overruns, right? So this is an area with a potential to break, but look at this, guys. 1, 2, 3, 4 areas that haven't broken, but we're saying that there's potential. No worries. Josh, if you get a pivot directly from an area and it gives you a full reversal, that's a strong top and bottom. If all of your trigger lines break and then they unbreak, well, it may have been overrun. These are just areas, right? What's your best look? Let's define that, because remember, guys, we're building a foundation. Your best look is when price reaches the area and absolutely none of the trigger lines break through. When price reaches the area and absolutely none of the trigger lines break through, guys, that's the one. That's that look. That's the one that gets me giddy. Price exceeds support a little bit, right? All the trigger lines remain below. Once again, for you fib junkies, support acted as resistance, didn't it? My trigger lines remain below. And now we're back into support. Small trigger lines don't have momentum. Large trigger lines haven't broken either. So now what do we have here, guys? We have the potential. It may reverse the market, but it's not guaranteed. If it's really, absolutely, Josh. If this is really going to be a termination condition, if this is really going to be a bottom, the trigger lines are going to roll. And Josh, you nailed it. Price exceeds the divergence low. But there's an awful lot of pressure to the downside right now, isn't there, guys? Look what the market's done. Whoops. Look at what's been happening since 9 a.m. It's been nothing but down, nothing but down. Dave B, in a strong downtrend and price pulls back to a mid-band, is there a trade? Dave B, if you've created a set of rules for yourself that say in a strong trend, maybe the market's got 30 or 40 bars in the same direction, it's smashed through every area that it's gone through because of the pressure, and you say with or without favorable large triggers, if I have a clear path, if everything says down, Dave, there's some traders that'll take that short trade until it doesn't work. Every time, until it doesn't work. It's not a high probability trend trade. And look what's happening right now. How many trigger lines made it through support? None, really. It's all about the rules, Dave. So Josh, now you have a pivot stop out, don't you? At support, that's a good look. If I get a full reversal and odds favorable momentum, man, that's a strong bottom. That's an awesome look for at least a potential slowdown. But if it's really going to be the bottom, all the trigger lines are going to roll, guys. If it's really going to stop the market and make it go the other direction, it's mathematically impossible for the trigger lines not to roll. Do you see it? Large triggers are still red and below all the areas. We've also reached resistance and none of my trigger lines have broken through. But now it's working, right? Now that pivot stop out is trying to reverse this market. But we can see this red area. We can see 74.50 and none of my trigger lines are through it, guys. Am I looking for long trades into an area that's been reached without any trigger lines through it? Because I don't have a clear path, do I? Isn't that awesome? All you have to do is gauge. Price reaches, where are the triggers? But Josh, now you have a pivot stop out at support that's created a full reversal, that's given you odds favorable momentum. You can start the process of saying, if those small triggers smash through just like they did, well, it might be time for me to look for an entry. I'm going to respect that mid-band because it's been such a downtrend. But now we're getting close to where our rules are met to look for a potential entry. I don't know, Joel. I'm only teaching on 2 charts. Because we're just building a foundation, right? We're just looking for the best of the best. We're looking for the advantage of momentum. Is everybody comfortable with the advantage of momentum? Strong triggerlet? That is work. Get it done, Joel. Ha-ha. Is everybody comfortable? Price reaches an area and absolutely none of the trigger lines go through. We don't have the advantage of a clear path. There's no reason to risk your money into a brick wall, right? You wouldn't drive your new Corvette into a brick wall and hope that it goes through unscathed. 60% of the time, these termination conditions work every time, guys. So we have the advantage of momentum. You're doing great. We have the advantage of a clear path, and the only thing left to do, guys, is to understand where that market is likely to continue, right? Look for an area entry, an entry for area. I'm going to reverse that. I had a half a cup of coffee over my limit today. I apologize. When everything's going up, when the market has momentum, when there's no termination conditions, guys, this is your look on the 5-1, right? Everything, all those bars are going up. Those large triggers should be up and strong. And all you're going to do is you're going to look and see, where are the areas? Guys, when we talk about a high probability trend trade, they all originate at areas. Your entries come from an area on your smaller, faster chart. And those areas can be fibs, mid-bands, or one-to-ones, right? Fibs, mid-bands, or one-to-ones. Any combination in there. Here I have a fib, I have a mid-band, and I have one-to-ones. I'm just identifying where are the areas, where are my large triggers. Rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. When everything's going up, we want it to come down, guys. When every chart is screaming to the upside, when there's a clear path, when there's odds favorable momentum, we want it to come down. We're trading with the large crowd, right? We're trading with the momentum. We are trading with the direction. We're trading with the clear path. We want a small handful of yahoos that are willing to fight that trend, that are willing to fight that momentum, guys. These are the guys that give us our best of the best entries. Don't be a yahoo. Let them get you to that area where the market is likely to continue. Guys, your pullback begins with a reversal bar. And a reversal bar lets you know that a trade may be coming. So your eyes are going to come down to those areas of support. Your eyes are going to look at those large triggers, and you're going to create what's called a window of opportunity. For a long trade, your window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. So from 79.20 right here at the mid band, the large triggers are coming up like a shark about to breach, to this lowest point, these one-to-ones. Guys, this is the area where the market is likely to continue. Not guaranteed to continue, but likely to continue. Are you with me so far? If price pulls back to your window, guys, you're in a trade. If price pulls back to that window of opportunity, your limit order was waiting for it. Just waiting for the market to get there. And you're in a trade at 79.21. You're long. Why are you long? Let's go through it. Remember, we're building a foundation. You're long because the large chart said that we had strong trigger lines, giving you the advantage of momentum. You're in a long position because termination conditions didn't exist on the 13.2. You have the advantage of a clear path. And you're long because you have the ability to pinpoint with unbelievable accuracy where the market is likely to continue. And now you have the advantage of an entry area. Price pulls back to the window, right? Guys, your initial stop goes down here where the market shouldn't go. Below the areas of support, below the large triggers. And you're in this trade. And guys, I will take this trade 1,000 out of 1,000 times. Because this is a trade, when you follow the rules, typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. This is a trade that teaches you to enter the market at the correct point. Because when you enter the market at the correct point, it makes management easy. Notice how because I waited for the market to pull all the way back to the window, my initial stop goes right here below. But what do we see after? Once that market begins to move in the direction of my trade, I can reduce my risk below that reversal bar. And because I waited for the pullback, I've increased my profit potential. Guys, this is your best of the best. All you're doing is you're building a foundation, right? All you're doing is you're telling yourself that it's time for me to trust, to learn to believe in the advantage of a methodology that's been proven to win more than it loses. So on your 13.2, when you have odds favorable momentum, when you have no termination conditions, and you see that tail, circle it. Go back and do this study drill. When that tail lines up with areas inside of favorable large triggers, and guys, I had someone send me a message yesterday asking about favorable large triggers. Let me show you the best of the best, guys, because that's what we're talking about, right? The best of the best is when they're one on top of the other, trending with the market. The large and synthetic work together, overlapping. That's your best of the best look. The reality is sometimes there'll be a little space, right? Sometimes they won't be all on one top of the other. But the tighter these trigger lines are, the more concise your window of opportunity becomes. So I want you guys to scroll back. I want you to circle these tails, and I want you to see if they line up. And remember that we're not trading tails. We're refining on that 5-1 chart so that we can determine where that tail is most likely to print. So small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. Guys, give me a Y in the room if you're with me. We don't have a clear path because the large triggers aren't through just yet, right? But if the conditions are perfect, can I identify my areas of resistance inside of favorable large triggers? And let's think about it. An area with the potential to break but hasn't broken. An area with the potential to break but hasn't broken. My window extends 10 ticks wide, right? Guys, this is the process right here. This is all you need to learn in the first 30 days. Is understand how to find that entry. Understand how to recognize that window of opportunity. Understand where your best chance of success comes from. Because bad entries, look at that. See how the window shrinks as the trigger lines come down? Our job is to put that limit order a tick or two below that window. If we did that, you're already in this trade, right? You have momentum. You're coming from a termination condition that created a full reversal. Remember, we talked about this being a termination condition. And now we're at an area where the market's likely to continue, but this isn't an area that's broken. Fibonacci support isn't completely broken. Termination condition isn't completely broken. It has the potential to break. This isn't a high probability trend trade, guys. Give me a Y in the room if you recognize that. This is an area with the potential to hold. This is an area with the potential to break. Guys, medium probability trades, if you decide to add them to your plan, if you take this trade, well, then you have to manage it assertively, which means that you'll probably take quick profits. You'll probably look for opportunities to get to a zero loss level. And one of the tools that you can use on these medium probability trades is this final termination condition. Three divergence in the same location, guys, may terminate the trend. Three divergence in the same location means that we've had three slowdowns. Divergence prints, right? We're losing momentum. It happens 3 times, it may terminate the trend. If those small triggers go from odds favorable to anything can happen, it becomes even more powerful. And if that final pivot can't take out the previous and we lose momentum, well, now you've got a head and shoulders pattern. So on its own, it may terminate. Trigger lines go to anything can happen, it becomes more powerful. That higher from a low or lower from a high, it becomes even more powerful. You'll be able to use that as an opportunity to assertively manage. Hypothetically, if this were our short, maybe we take quick profits at the first trouble spot. When three divergences print, it gives us the opportunity to recognize that this isn't a trade that we want to be in anymore. Guys, this medium probability trade on an area that had the potential to break went right to the area that says it should stop the market, didn't it? But then divergence prints. My triggers are weak. This is a fight between buyers and sellers. And that's exactly what you're looking at right now. Areas with the potential to break are not broken. And I think that it's important that you remember that if you're going to go outside of the best, you have to understand that it's a trade that maybe doesn't have the same win percentage. Does that make sense, guys? Odds favorable. No termination conditions. What's the pullback look like? Let's go to one of the circles that we put on here today. I'm going to go back to 834. And let's see what happened at 834. And guys, you know that scrolling back is one of the best ways to get good at what you're doing. Come back and see what's happened. See if it lines up with your rules. If you miss a trade, go back. Did it follow the rules? All right. You guys want to do it together? You want to find an entry together? Let's take the noise off. Let's just do trigger lines and let's not worry about anything else. Of course we do. And let's get rid of the circles so that you guys don't get a cheater. All right, new users. Mohammed, Cornelio, Spoonie, Christina, Edward, Eddie, Jims. I think I've got a couple of you. On my 13-2, do I have odds favorable momentum? Small's below the large are wide, they're angled in the direction of the trend. How do we feel about that look? Is this a market likely to continue? Absolutely. No termination conditions. I have not reached an area to stop this market potentially. Does everybody see it? Rules 1 and 2 are met. So now I look right to my smaller, faster chart, right? And what do I need to begin the process of looking for a window of opportunity? Paul, that's up to you. There's medium impact news at 10 a.m. Are you willing to be in a position in front of a situation that may create an emotional response? I'm just going to teach keep in class. Exactly, D. We're looking for a pullback. And a pullback starts with what? It starts with a reversal bar. And there it is. Does everybody see it? Cool. Guys, not every circle is going to be a trade, but let's look from the top of my large triggers to the bottom of my large triggers. Is everybody comfortable with that? All we're doing is identifying our large triggers. And now let's go from the lowest point of resistance, whoops, to the highest point of resistance inside of those large triggers. That window gets considerably smaller, doesn't it? It goes from a large area to a small area. Our job is to put a limit order a couple ticks below that area and wait and see what happens. And it hit that mid-band, didn't it? Didn't make it the first time, but then it comes up again and hits that mid-band. Do you guys see it? Reversal bar. We were looking for the mid-band the first time, but it didn't make it. If you jumped in, it ultimately did exactly what it was saying it wanted to do. Notice that we still have strong triggers. It's only 2 divergences. And that area is still right inside of those favorable large triggers. Now, if a third divergence prints, that could change the direction, right? And ultimately, it comes back up. But from your entry at 75.74 down to 75.52, that's over $200 worth of profit, guys. Your job as a brand new user is to learn to recognize the advantage of momentum, to learn to recognize the advantage of a clear path, and commit yourself to practicing over and over so that you can recognize the best of the best areas, so that you can create that window of opportunity at the areas of support or resistance inside of favorable large triggers. Reversal bar prints. Red box shows from the top of the triggers to the bottom of the triggers. Teal box shows the areas inside. Give me a Y if you're with me, guys. This is your foundation. This is your basic understanding of momentum, of a clear path, and then where the market is likely to continue. You're going to grow outside of these basics, guys, I promise you. There's going to be a point where you've done so much study, where you've taken so many pictures. Hey, good morning, Eddie, Cornelio, good to see you guys. Where you've done so much study and so much picture taking and so much participation in class that you're going to be able to recognize the absolute best of the best in your world. What's your comfort zone? What's your trade? And you'll formulate a plan based on that. But for now, until you get those basic concepts down, until you understand momentum a little bit, until you can gauge that clear path, until you can identify the area of entry, focus on this for 30 days. That's only 20 trading days, right? Can everybody do that? Let's learn to read our indicators. Let's learn our rules. Ron, what's the phrase? Learn your rules like a scientist so that you can break them like an artist, I think it is. Something like that. Learn to read your charts so that you can build your plan. Close enough, thanks. All right, guys, so that's your high probability. We've got news in 3 minutes. There's crude oil. What do we see? Strong triggers, smalls above the large, larger wide, angled in the direction of the trend. They haven't reached those one-to-ones yet. In the event of a pullback, can't I put a limit order right at the top of my window, right above the highest point of support? Does everybody see it? Looks exactly like the manual, doesn't it? Odds favorable. Haven't reached the key area. I'm waiting for a reversal bar, but even before that reversal bar prints, because maybe it won't, from the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support, that's where the market's likely to continue. Has this area broken yet? Not yet, right? So this isn't a high probability trade, it's a medium probability trade. It's a medium probability trade with momentum on an area with the potential to break. Here's the bottom of my window all the way down here, right? Do you see how this works? All we're doing is gauging whether or not we have the advantages present to try to take a trade. Why are my synthetic triggers different than yours? I don't know. I've got one inside and I've got one below, right? And guys, if that market goes where it shouldn't, outside of that window of opportunity, I would have my stop place somewhere down here. I'm just going to close that one out, and it may still go, but I'm not here to teach you guys. I'm not here to take trades. What I'm here to do is teach you how to identify where the market is most likely to continue, to teach you how to recognize where the market has the best chance. I need a why in the room for you guys. Was this area broken or did it have the potential to break? You see that it only had potential, not a high probability trend trade. It's a lower probability trend trade. Exactly, Josh. It still went to the bottom of where that window of opportunity, that lowest point of support. But you have to remember, when you give away the advantage of a clear path, you also give away a percentage that that trade may win. I think people forget that. It's not a high probability trend trade scenario. Not yet. It was close, but it wasn't high probability. Guys, news is printing right about now. Here's your S&P. Let's see how it affects it. I'm going to take just a couple minutes. When I come back, we're going to start looking at the pictures that you guys have posted, but we're going to go through the process of potentially writing a plan, of getting yourself in a position where you can stay focused on the absolute best of the best, building that foundation so that you can grow from it. All triggers below resistance, all triggers above support. Guys, you've got your conditions. If this breaks, then I'll look for opportunities. If this breaks, then I'll look for opportunities. Until I have a clear path, I'm going to sit on my hands. I'll be back in a minute, guys, and we're going to start looking at all those pictures you've been posted. If you have a question, post it. If you have a picture, post it. I'll be back in just a few. You see how quickly you can create a window of opportunity, but what are we saying, guys? That divergence high has the potential to break, but it hasn't yet broken. So once again, we're medium probability. There is no divergence. There's a relatively small window of opportunity. You can make a decision about whether or not this is a part of your plan, or whether you prefer to keep these not yet broken areas out of your plan as you learn to read your indicators. Neither is wrong. This one's a pivot stop out at support. This is a good bottom, a strong bottom that creates a full reversal that provides odds favorable momentum. This is a medium probability trade with no divergence, strong triggers, and a tiny little window of opportunity. If you took this trade, your risk has already been established behind that reversal bar. And with that momentum, you can identify where the market is likely to go. 39, 66, 75-ish is a great spot. This is a trade that needs to be managed assertively because it is a medium probability trade, which means you've probably already taken a portion of your profits if you're one of my medium probability traders, and you're probably at a zero loss level. And if divergence prints and those triggers are inside on a 50-50, well, it may be an exit condition, but the momentum on the 13.2 says we got a good shot of getting to that next Fibonacci area. What do you think, guys? Looks a lot like the manual, doesn't it? I can't make this stuff up. That just happened right in front of you. All right, I'm going to start going through your pictures in just a second, but I want to share something with you guys. I'm going to give you guys a little gift here. I'm going to give you a high probability trend trade checklist, and I'm actually going to give you two versions of it. I'm going to give you one that you can print out and you can put it on your desktop, and every time you take a trade, you can make sure that you're following rules, right? Every time you take a trade, you can make a decision about whether or not you had that momentum, whether or not you had that clear path, whether or not you had an opportunity at an area of support inside of favorable large triggers. Isn't that beautiful? That's your best of the best. That's what those checklists are going to do. And guys, those checklists are provided to you because I'm going to also give you how to write your plan. As you go into the weekend, it's important to me that you come back next week with a little bit of focus, right? For your first 30 days, that's really big. For your first 30 days, you're focusing on a high probability trend trade, a trend trade where each indicator on every chart agrees for the trade. I want you to write this down on a piece of paper, guys. Go ahead and do it in pencil because your plan is going to grow as you grow. But in the beginning, that commitment, 20 trading days, my trade is the high probability trend trade. My trade is the trade when each indicator on every chart agrees for the trade. And to enter this trade, I must have the conditions of the checklist met. And guys, this is the same checklist that I just put in the room for you. One of them is just a repeating. There's those rules over and over. Every trade you take, you can police yourself. The second one is the same rules, but pictures stolen from the manual so that you have an idea of what they look like. Those were just uploaded into the room. Guys, you're going to pinpoint your entry, right? That's all you're doing. You're working on entries, getting in at the best of the best spot, creating that great foundation so that you can grow. My trade is the high probability trend trade. In order to enter, my rules must be met. And you're going to train your brain. There's only two options. Either your rules are met or they're not. As you're practicing your rules, you're going to break them a lot. That's why we rely on you posting your pictures in the room so that we can talk about it every time. And I want you to take pictures of your perfect entry, guys. Study. Do those circles. Look for the perfect entries. Steal pictures from class when the rules are met. Grab them from the manual. But in the first 30 days, the more pictures you take of your charts, the more you write on your charts, the faster you're going to get to where you want to be, guys. And 10 pictures a day is 50 pictures a week. Guys, I take 10 pictures in the first 20 minutes. That's 200 a month. That's 2,400 pictures by the end of the year. And the reality is, if you're taking pictures every day, you're going to be up closer to 5,000 or 6,000 by the end of the year. And after 5,000 or 6,000 pictures, patterns become pretty easy. You recognize them pretty fast. This is your path, guys. For the first 30 days, simulate, define your rules so you know when it's time to take a trade. Take those trades, and remember the path to becoming a successful trader? Straight out of the manual. Dun, dun, dun. Post your trades in class. Let's talk about everything that you see, and we're going to track them in a performance sheet, guys. Learn the rules for when it's okay to trade. That's that checklist. Simulate. Don't practice the wrong trades. Don't break rules because you're on simulator because it's fun to watch the money grow. Simplify your plan. Replay the day. Practice. Use that market replay. Fix your mistakes. Take pictures of those correct trades. Repeat this process every day until you always take the correct trades. Look at that entry, guys. No divergence, tiny window of opportunity, odds favorable from a good bottom. 2 divergences print. The small triggers find their way inside of the large triggers. We're witnessing a slowdown on the 5-1 chart that you weren't able to see on the 13-2. But guys, you can take a picture of this entry because all you're focused on is entries in the beginning, right? Is everybody with me on that? If you can get to the point where you nail this entry every time, things are going to get easy for you, right? Because what does this do? It reduces risk. It maximizes profit potential. So your job is to take this picture either with Snagit, if you have Snagit. If you don't have Snagit, you have capture software on your computer, guys. When you downloaded the software, this is part of the download process. It's just a big red button. If you're brand new, my demos, this is for you. I want you to follow along with me. I want you to find your capture software, and I want you to open it up. All right? And I want you to click that big red button. And if I hover over just one chart, guys, it's going to give me one chart's worth of information. So I want you to go to the top left corner of your 13.2, and I want you to drag it all the way down to the bottom right, and then release that mouse. Release the mouse. When you release the mouse, you're going to click the camera icon, and it's going to capture that image. And guys, you're halfway there. See how I have a still picture of the market? I have my 13.2. I have my 5-1. I can use arrows to point out things that I see. I can use these shapes to identify what's going on. But the most important tool that you can use, and guys, I almost insist that you do this, because a lot of you are going to ask me, hey, Mark, is this a trade? Hey, Mark, did I have a trade? Mark, was there an entry here? If you get in the habit of writing your rules on the chart, you're going to know. You're going to be able to answer that for yourself. And remember, trading's an individual sport. If you label the conditions that got you in, if you tell me how you were feeling, were you confident? Were you anxious? Were you nervous? Well, now you and I are going to have the best conversation ever. So if I take this picture, I may annotate. Let me get my... This is a strong bottom, right? And I might even define it to reinforce the lesson. This is a term that creates a full reversal. I'm going to come over here on my 13.2, and I'm going to say something clever, like odds favorable, 50-50. And I'm going to define it. Potential to break, but it hasn't broken yet, guys. What I'm doing is I'm reinforcing the looks, I'm reinforcing the lessons, and then on my 5-1, entry at areas inside of favorable large triggers, I'm reinforcing rule number 3. And then maybe I'm going to say, because I want us to have the best conversation ever, two divergence with the triggers inside. I managed out of my medium probability trade. Is everybody with me on this? What have we done in one picture? We've reinforced our rules. We've identified patterns that help bring us success. We've identified patterns that teach us to manage. We've identified where the market is likely to continue, whether you took the trade or not. Now you're just going to upload it. And when you upload that media, it's going to put it in the screencast cloud. When I hit copy, the first thing I'm going to do is put it in the classroom so that I can get feedback. The next thing I'm going to do is I'm going to go to my spreadsheet. And on the first page, every trade that I take, I'm going to put that link in there. I'm going to post the address, and I'm going to call it 50-50 winner. And now I can come back and study it the next day. And because it was the perfect 50-50, because that area had the potential to break, but it didn't, but it hadn't yet, but because my conditions were perfect on the 5-1, no divergence, strong triggers, small window of opportunity, I'm going to put perfect 50-50 entry. And now I have this picture in my favorite looks so I can come back and study it again. New trader, why was it a 50-50? Because the small triggers had gotten through that divergence high line, right? The small triggers had broken through with odds favorable momentum, but my large triggers remain below. 50% of my triggers are through, 50% are not. 50% of the triggers are through, 50% are not. An area is broken when all the trigger lines are through an area. Until all the trigger lines get through, it's what we call a 50-50, and I'm looking for that perfect entry on the 5-1. I'm looking for that no divergence. I'm looking for that tight window of opportunity, right? This area has the potential to break, but it hasn't broken yet. New trader, if we go back and look at the live market, it never broke, did it? We knew that it had the potential, but it hadn't yet. Yeah, that mid-band was right on top of it, new trader. And now, because the market has odds favorable, because there's large triggers, once again, we're at a divergence low, aren't we? But because rules 1 and 2 are met for a medium probability trade, can't I identify the bottom of my triggers to the top of my triggers and then whittle that down from the highest point of resistance to the lowest point of resistance and create a window of opportunity in the event that I get a pullback? Same thing every day, same patterns over and over, giving you the advantage. Isn't that awesome? Christina, your analysis is going to happen in 3 to 4 seconds. If it takes longer than 8 seconds after 30 days, you're probably fabricating a trade, right? And what does divergence mean, Paul? Oh yeah, over here. Man, I even made a picture on that. Guys, this is how common that is. When we talk about termination conditions, the divergence low line, the magenta high line, these are the two most forgotten areas that may create a reversal. So in the moment, they show you a loss of momentum, just like Paul said. That's why when we take a 50-50, that loss of momentum takes away even more of an advantage. But anytime the market has a divergence low, and this is my 2 cents on it, or high, it represents a specific point in the market where not only could the in-control force, maybe the buyers or the sellers, not push the market any further in their direction, but it represents a loss of momentum there as well. It's like a line in the sand. And that's why pivot stop outs are so strong. They get to that line in the sand, and if the trigger lines don't break it, well, then we know that they're still holding that line. And if the trigger line smashed through it, well, then we know that they've given up on that potential line. And it's a key price where the failure has already happened. So this is a key price where the buyers couldn't get any more work done, right? This is a key price where the sellers couldn't get any more work done. So as we come into it, we respect it the same way we respect a fib. This is an area that hasn't broken yet. It's a key price that hasn't quite broken. So we're going to give it some respect. If we take the trade, well, then we're going to manage it assertively. Which means that if you're in from the top of the window, you've already had your reversal bar, which means your risk is right here. If you're then at the bottom of the window, you're a few ticks into it. What if this divergence prints? What if I get a loss of momentum on a 50-50 trade? Well, then you're going to have to create a rule, right? If divergence prints on an area that hasn't yet broken, maybe I'll exit the trade. New trader, you can say whatever you want. Sometimes it does. It just depends. Sometimes it comes after the fib. Sometimes the fib gets overrun. Here, that divergence low came from exactly at 1-to-1s, didn't it? And look what happens. So you gotta believe there's buyers in the water here. They recognize this area. But this 50-50 trade still hasn't had a reason. This 1-to-1 represents your first trouble spot, right? 3 points away from your potential entry. It would be appropriate to be break even at this point. If divergence prints, it's a management opportunity. Guys, if divergence doesn't print, where's the next potential area to get to? 39.46, right? So we're watching this divergence potential. It won't be true until the third bar. I'm not exiting on potential, but there's your break-even stop. If you got in at the mid-band, right? If divergence prints, maybe you wait for that clear path again. You've already taken profits at the 1-to-1s. There you go. Divergence is true. And there's a break-even stop on a trade where the area had the potential to break, but it hadn't yet broken. Does that make sense? Pretty cool, isn't it? You can take medium probability trades, but your ability to read your charts is going to help you manage them assertively. All right, let's look at some of your pictures, guys. You've been posting, I've been flapping my gums. I'm going to go up to the top of the day, and we're going to take a look and see what we have. Joel got us going at about 10:36 last night. Guys, those checklists that I gave you, I'm a big fan of using the checklist, right? Joel has the same checklist on his chart. Does he have odds favorable momentum? He said no. He said he has anything can happen triggers. No termination conditions on the 13.2 is true. He's identified his area of opportunity, and he even said it's not inside of favorable large triggers. Joel knows that he's changing the dynamic. It's not a high probability trend trade, but what it is an amazing chart read, willing to take a shot, excuse me, guys, and manage assertively because he's given away the advantage of momentum. And Joel, it's the honesty in your checklist. Not checking yes when it's not yes, guys. This is big. That's self-policing. And he does it again on this trade. He says, I'm trading directly into a termination condition, but I have so many other advantages that I'll take it and manage it assertively. Once again, not a high probability trend trade. But Joel has been honest with himself at the issue that is present, and he's taken the best entry, which gives him the easiest management, and he's able to take this trade that isn't high probability and make money all the way down to that trouble spot. Joel, I think that this is great execution, and even more so, I think that the honesty that you're putting on your charts, identifying the troubles, gives you the opportunity to create a solid management plan, right? Gives you the opportunity to say, these are my challenges. It's not a clear path. I'm going to manage assertively. Same thing here, 50-50. Smalls below the large, larger wide, coming from a good top that creates a full reversal. Look at that entry, guys. Area of resistance right there inside of those synthetics. And then profits down to the next trouble area. This was John Novak this morning taking trades, using those indicators to create advantages, using that great chart reading, and taking pretty easy profits when everything says down, going down. Safia, let's see what you did. Not fully confident, a bit nervous. How come? Well, because you're trading directly into a termination condition, right? I know that I'm giving away the advantage of a clear path, so I'm a little nervous. Safia, your amazing entry makes it manageable, and you don't sit and hope. You take profits at that area that hasn't broken yet. You rely on the momentum, the great entry, understanding where your stops should go. What a great job. Not a high probability trend trade, right? But she was honest with herself. She knew that she had a problem, and she managed the trade accordingly. Safia, great work. Guys, high probability trend trades are the beginning, right? Teaching you to read your indicators, to identify potential problems so that you can manage them accordingly. I love it. Safia, what'd you do next? Let's look at your picture here. 50-50, right? Now, Safia, you've got a 50-50 trade, medium probability. You identified it. You get in at the area inside of those synthetic triggers. Notice that you're larger down here. The synthetics are up here. You've already had a couple losses of momentum. I like your entry. Your stop keeps you safe. You take quick profits once again. There's that third divergence, right? We know it on the third bar. No reason to lose money on this trade, Safia. You're taking, once again, a medium probability trade. You're fudging the rules on your entry. So you're offering the market a lot of sacrifices, a lot of aborted advantages. It's an emotional trade. Those happen, don't they? All right, Zeba. Zeba, your first picture of a trade. All right. You ready, Zeba? What direction is the trend? Down. What direction is the momentum with those trigger lines? Isn't that odds favorable momentum to the downside? And guys, I'm going to show you a little something. In the beginning, I want you to take every trade that you see. So Zeba, you're fighting trend. You're fighting momentum. Everything says down. Everything says down. The only thing that says up in this instance is potentially those small triggers. And you decided to fight the crowd and go long. Don't be stressed. You're okay. So Zeba, one of the most important tools that you guys can use is right on these charts. The trend is down. Momentum is down. I had a magenta mid-band inside of favorable large triggers. Zeba, do you see how I'd rather see you take a short trade right here and lose it than take a long trade against everything and get lucky? Because this is a trade that typically won't do that. 70 to 80% of the time, this market keeps going down from that area of resistance. Does that make sense? You did great. But you couldn't have used a limit order, right? No, you wanted to sell here, Zeba. Sell is down, buy is up. So you fought everything and went long when everything said short. You got lucky. Look at that. You made money. But what's dangerous, right? Yeah, everybody's stressed at first. And that's why we're on simulator. What's dangerous is the market said, hey, Ziba, great job fighting momentum. Great job fighting direction. Way to get in long where it should have been a short. I'm going to give you a little bit of money so you do this when you go live. No, that's not it at all. Ziba, you're brand new. That was your first trade, right? First trade, Ziba? Yes? I think that's what you said. Your first entry ever? Ever. You should wait for the rules to be met. So, Ziba, is it fair to say you're not getting this on your first trade ever? Hell no. Take a trade, throw it out there, and let's talk about it. And Ziba, you're going to grow through the conversations that we have. Now you know that you were fighting a little bit, right? And everybody in this room's done the same thing, and they're congratulating you on having the courage to post it. Now you know you're fighting a little bit. That's okay. Make every mistake you can make, Ziba. Every mistake known to man, I want you to make. Because we learn from our mistakes. Ron C., we talked about that one, taking advantage of momentum and a clear path. Great chart reading. Ron C., same picture, I believe. Taking advantage of momentum and a clear path. A little different than the high probability trend trade. Everybody grows. Everybody sees something different. Gary says everything is strong down. I think that's 13.2. No trades. Didn't have a good top or bottom. 50-50 trade. Things seem to be slowing down. Gary says, you know what? I'm not into that trade. It doesn't fit my rules the way I need it to fit them. All right, Ziba. All right, so Ziba, 2 minutes ago, you said, ugh, I'm not getting this, didn't you? 2 minutes ago. So let's do this again, Ziba, and this is why I want you to write your rules on the chart. Rule number 1 says odds favorable momentum. Ziba, is rule number 1 met on this chart? There's smalls above the large. Are the large wide? Are they angled in the direction of the trend? Yes. How about rule 2, no termination conditions? Is that one met on this chart, Ziba? Yes. Here's the top of your large triggers. Here's the bottom of your large triggers. So on your second picture, technically, that's the only area inside. But as price comes up, right, these triggers come up as well. That's close. The only thing that I would change, Ziba, is I would either have your limit order right here at the 1-to-1s, or I would have it down here actually inside. So Ziba, 2 minutes ago, you weren't getting this at all. 2 minutes later, your second picture shows a great understanding. So now it's just patience, right? Now it's waiting for this setup, waiting for this look, waiting for this opportunity. Ziba, you know this better than you think. You have to stop equating mistakes with failure. And this is for everybody. Stop equating mistakes with failure. Mistakes make you grow. Struggles create strength, right? New trader, rule number 3 says that I'm going to buy an area inside of favorable large triggers. The only area inside of favorable large triggers is this support down here in the moment, right? So the only coaching Ziba gets on this one is her entry isn't at an area. Is it inside of the favorable large trigger, Ziba? Not yet, right? It's not inside. Haha, there's that light that just went off. And no, not shoot. Not shoot. I want you guys typing. When you make a mistake and you have the courage to put it in this room, I want you to celebrate everything that you got right. It is. Angela, is it inside of my triggers? So let's go back to some entry pictures, guys. I love the conversations that we're having right now. So Angela, is it Angela or Angel? Angela? Ideally, when the triggers are up, when there's no termination conditions, if I draw a box, exactly, from the bottom of the triggers to the top of the triggers, I'm looking for those areas that fall inside. So yeah, those areas, and this is so important for you guys. I got a message yesterday saying, well, Mark, you told us that it had to be a mid-band. But what we really look for is we look for a mid-band, we look for one-to-ones, or we look for fibs. Luciano, you just broke up my message there. So it may be a mid-band, it may be a fib. The key, guys, is that we're looking for that area to be inside of favorable large triggers. Does that make sense? Triggers that are strong in the direction. No, you're okay. That happens sometimes. So Ziba, great work. You are like 70% there on this picture, and 70% in the major leagues gets you $10 million a year. Nice job. All right, I'm going to scroll back up. Let's find the next picture. Guys, welcome to the room. Welcome to the class. This is what we do every day in and day out. We're going to look at your trades. We're going to talk about what you see. I'm going to interject my 2 cents. All right, new trader, this was you. Smalls, price reaches the area of support. No trigger lines break through, right? So we're into a termination condition. Do you see it, new trader? And guys, I scroll back and forth. I open your pictures and then I scroll back down. Excuse me just 1 second. I'll be right back. All right, sorry about that. Got to say goodbye to the wife. So, new trader, odds favorable, right? But we're into a termination condition. What does that mean? That means that you're giving away the advantage of a clear path. But there's an entry on a pullback directly to an area inside of favorable large triggers. The large triggers are overlapping. You know that you've got a nice area on what's not a high probability trade, and you have the opportunity to manage it assertively with this much momentum. Guys, I'll never tell you where to take trades. I'll never tell you if you should or should not. But I'll point out if the rule's not met. We'll talk about the advantage that you're giving away. And then you can make a decision on whether or not you have the capabilities to manage that trade assertively, to get you out at trouble, get to a zero loss, and be able to take advantage of the other things that are in place, saying that market may continue. So new trader, I hope that helped. You're trading with direction. You're trading with momentum. Doing a great job on all of that. Ziba, once again, I love this. Keep posting these pictures, Ziba. Smalls below the large. The large are wide. They're angled in the direction of the trend. Ziba, you accidentally went long instead of short. Do you see it? You were looking to take a short trade right here, weren't you? You clicked buy market. So what you did is you clicked buy limit as price was coming up. So it puts you in the market instantly. Where you were trying to short, you accidentally went long. That's okay. We've all done it. This is telling you that you're down $40 in that trade. If you make a mistake like this, if the rules say down, if momentum says down, if the area says down, and let me give you a little more praise here, you nailed the spot perfectly. You just went the wrong direction. Hit close. See how your targets are above you? You're anticipating the market to go up. Her entry price was $74.27, new trader, just below that midband, inside of favorable large triggers. But should we have been selling or buying? Ziba, you wanted to sell, right? Nope. D, everything says down. So we wanted to be selling. She was buying. This was a mistake. So if you get into a trade and your targets, T1, T2 are above you, it means that you're in a long position. It means that you've gotten into a position anticipating it to go up. And of course, Ziba here, you were anticipating it to go down, weren't you? So what this means, sell stop 2. This means that if the trade goes wrong, here's your protective stop. If it hits it, you're out of the trade. Sell target 1 for your first contract. Sell target 2. And why are these sells? Because you bought. So the opposite of a buy is a sell. It's tick for tack. It's yin and yang. If I buy the market, I have to sell it to get out. If I sell the market, I have to buy it to get out. Does that make sense, Ziba? Beautiful entry on a high probability trend trade short that you just accidentally went the wrong way. So once again, you went from not getting this at all to being able to, in your second week, identify entries. And now we're just going to work on the mechanics a little bit so you go the right direction. Great work, Ziba. And you're going to make that mistake. We've all made it. Just hit close. Wait for the next trade. Of course. All right, we've got Paul here. Let's start on the 13-2. 50-50, right? Is everybody comfortable with that? 50-50. Smalls have broken, large have not. Large have not. Areas with the potential to break but have not broken. Paul says, with no divergence, on a 50-50, he'll take his entry at the area inside of favorable large triggers. His stop keeps him safe. He takes profits and then gets out break even on the second because this is the potential to break, but it's not an area that's broken. Paul, great entry, great management. You, my friend, have caught your stride. Can I give a secret away, Paul? I got a message yesterday, and Paul said, I went back through this week because this week has been my best week ever. And I believe the phrase he said is, all my trades look the same. It's the same 3 looks. Consistency. It's the same 3 pictures on every trade, right? It's consistency. It's knowing exactly what it takes to get you into the market and committing to it, and then formulating a plan as you grow to get out of the market. And it takes time, guys. It takes some time to get good at this. But once you're good at it, there's nothing that you can't do. Once you learn to read your charts, you'll create a set of rules that appeal to you. And this is why Ron pays attention to large chart obstructions, because they may stop the market. Becomes a beautiful exit point. Nice job, Ron. Great trade. All right, Safia. All right, quick new user check. Mohammed Cornelio Spoonie. Be loyal, Christina, Edward, Eddie. How we doing so far? Right now, if you're in demo, all you're doing is understanding how we teach, that we lay this foundation out, and then I expect you to do the work. I expect you to go through and look for these trades. I expect you to simulate. I'm looking for you to make as many mistakes as you can make so that we can grow from them, right? I love it, Christina, and we will analyze every one of them. Safia, tail into momentum, right? Losing momentum, losing it a second time. Beautiful entry. Smalls are still outside. The area is completely broken. The smalls are outside. The entry is beautiful. We're just losing a little bit of momentum, right? And when you start to lose momentum, it may push higher. And in this case, it looks like it did. And you lost the trade. But you went through the process correctly. You had a clear path, didn't you? I love it. You're with momentum. It's not the best momentum. Yeah, so at this point, loss of momentum. It's okay. Your management's going to be slow. But look at your entry. Pretty nice, isn't it? All we're working on is entries. You guys are going to forget to remind yourself that you're new. Do it every now and then. I'll remind you that you're new. And that it takes a little bit of time to be able to read your charts in the moment. There's that 50-50 again, right? Smalls are through, large are not. No divergence. Paul takes his entry and keeps his stop outside of that window. Takes quick profits on the way down. And he's waiting to see if something changes. Second target right there. Paul, another beautiful entry. Another round of great management. New trader. Odds favorable, no terminations. Pull back to the area of resistance inside of favorable large triggers. And you can take that one all the way down to fibs, right? New trader, great job. Guys, this is your recipe. Rash emotional trading. Safia. Guys, if you go out into the world and something doesn't go your way, isn't there an emotional rush? If you're at work and something goes wrong, isn't there an emotional rush? If your kid comes home with a straight A report card, isn't there an emotional rush? There's going to be, right? But Safia, in your career, when you got that emotional rush, after repetition in your job, after creating a confidence in your ability to do what you do, that emotional response has very little bearing on your reaction, doesn't it? My wife was a surgical nurse, a trauma nurse in an OR setting. When people came in really bad shape, that's when she was at her calmest because she had gone through what it's going to take to save a life so many times that she's on autopilot. Guys, trading is no different. You've got to have those emotional surges. You've got to have that oh my gosh. But if you take pictures every time, aren't you creating confidence? Aren't you creating understanding? Of course you do. You get in the moment. You don't see anything else. And you fix what needs to be fixed and you do what needs to be done. Guys, trading is the same thing. When you enter a trade, you're going to go on autopilot eventually. You're going to see things that you never thought you would see, and it's going to help you recognize advantages. It's going to help you identify problems, and it's going to help you manage these trades successfully. I don't want you to get bummed about being emotional. If you break your rules, you break your rules. That's cool. Let's fix it. All right, D. Try and read what you wrote. You say 50-50 trade. You waited for the pullback and rode it up to the fib line. Odds favorable momentum. You put yes. D, are you with me in here? I want to talk about this chart. It does. When you go back and write on the trade, it helps a lot, doesn't it? All right, D. Whoops. Sometimes I snap a partial picture. All right, D, what direction is the market trending? And guys, I'm going to do this with everybody. What direction is the odds favorable momentum? It's down, right? Everybody can see it? What direction is the market? What direction are the large? What direction are the synthetic? What direction are the small? Everything says down, right, D? You bought the market. Everything on both charts said down. And you bought the market. And once again, guys, this is the market teaching you to break your rules. You got lucky, didn't you? You fought everything and you made money and you're thinking, holy smokes, I'm so good at this. What I really wanted to see here, D, I don't know anything, right? Where was my retracement here, D? Not one, right? There it is, same look. Zero retracement. Do you see it? Cool. Let's see if we can find another one like that. As it's smashing through here, it took another 5 points. No, it's okay. But I want you to remember, guys, trading is about having a statistical advantage every time. Hey, Mohammed, good to see you this morning. Trading is about having a statistical advantage every time you get in the market, right? That statistical advantage is momentum. That statistical advantage is a clear path. Guys, if you fight, if you're relying on this one little cyan line to stop a market in its tracks, you're probably going to be disappointed more often than not. So D, I want you to get in the habit. Don't fight that momentum. Don't fight that trend. Don't try and buy the short little retracement. Buy that mid band or sell that mid band. Go with the momentum. Go with the market. Go with the direction. Go with the areas. And keep it easy on yourself. Cal, a retracement means that when everything is going down, a retracement is just a tiny little pullback counter to the underlying trend. Does that make sense, Cal? Everything says down. That retracement is what gets us to our great entries. D, thanks for posting that chart. Keep posting them. But guys, there's no reason to fight. We don't have to guess. We don't trade what might happen. We trade what's happened. We trade the momentum that's present. We trade the areas that are present. We trade that clear path in the moment. Small's below the large are wide. They're angled in the direction of the trend. So D, here's the other side, right? Right where you exited, Safia got in. She took profits all the way down, trading with momentum, trading with direction. Safia, very nice. You're a little bit above resistance, but you're below resistance. Perfect stop placement. Beautiful trade, Safia. That's kind of cool, isn't it? We can see both sides of that trade. Awesome. And guys, if I tell you you made a mistake, it isn't to hurt your feelings. It's because I want you to be successful. I want you to be successful long term. I want you to trade with advantages. This software is unbelievable. You just have to learn to read it. And you have to get the repetitions so that you can learn to trust it. Sam User, I'm starting to think that you and Safia might be in the same room. Is divergence on the 13.2 considered a termination condition? I don't know, Sam. Let's consult the rules. A cyan divergence low line is a potential termination condition, right? Which means that we have a 50-50 trade. You entered a little bit above resistance. You didn't get in at the lowest point in the window. You got at the highest point of the window. You still got in at the window. Good job, right? It looks like it. You still got in like kind of at the top of the window there, but Sam, okay. If this completely runs you over, is it any more conservative? If this medium probability trade doesn't work, is it any more conservative? Not really, because your stop's just going to be higher. But Sam, wouldn't it stink to have it do exactly what it was supposed to do? Come right to that mid-band and then continue in the direction with your entry sitting up here wishing you were in? More often than not, with this much momentum, it's that low end of the window that gets hit. That's the only reason I say that. You're still inside the triggers, but your best of the best area is right here. It's a great trade. Beautiful exit. Way to identify that trouble spot. Cyan divergence, exactly. It means, well, in this case, it means that there was already a slowdown. The divergence here says absolutely. Says it's slowing down. So this one's already happened, Safia. This has already been a line in the sand where the sellers couldn't go any lower and the buyers stole their momentum. So when they retest it, we manage assertively. Great job, guys. Some great trading from you guys this morning. Great awareness, following rules, making those common mistakes that everybody makes. You're not alone. So that you can grow from it. Luciano, let's see what you did. I love seeing your charts. Luciano says everything says up. I've got odds favorable. My smalls broke through. I'm going to take an entry right here at support. And he takes quick profits. And guys, this is brilliant, isn't it? He still has odds favorable. He's still smashing through. Luciano doesn't say, well, I'm going to exit. Luciano says my rules are met for a trend trade. He could have added on. He trusts the 13.2 to take him to the next area. Wouldn't a break-even stop just be an entry at an area likely to continue? Luciano, that's some heads-up trading. And guys, look at how those trigger lines are overlapped, one on top of the other. Isn't that a beautiful look? Isn't that a small window of opportunity on a medium probability trade? Absolutely beautiful. I had someone tell me yesterday that this never happens. Apparently it does. Luciano, nice job. Great recognition, great trade with direction, with momentum. Yuri, nice to see you in here. Little late on the entry, right? You waited for market flow confirmation because it's a medium probability trade, but it's not really, is it? Yuri, do you see how you had the advantage of momentum? You had the advantage of a clear path, and you had a clearly defined window of opportunity right here at the bottom of those trigger lines. Are you guys with me on this? Odds favorable. All the trigger lines had cleared that area. Resistance is now behaving as support. Let's do that window of opportunity, guys. And sometimes you go get a cup of coffee and you don't get it. Let's go from the highest point of the triggers to the lowest point of the triggers. And guys, where is the window? The area of support inside of favorable large triggers? Look how the market came directly back to it. Pretty awesome, right? Get in at the area, reduce your risk, increase your profit potential. It's still a beautiful trade, but Yuri, if you're with me in the room, this isn't one of those trades where you really need that market flow confirmation. You have every advantage on your charts to take that trade at the area. Nice trade. Then Luciano again, I bet you I know what this looks like. It looks like odds favorable momentum, and it looks like no termination conditions, and it looks like a picture-perfect entry at an area of support inside of favorable large triggers. Good morning, KR. Guys, does everybody see how this fits the rules? Doesn't it make sense? I'm going to steal it, and I'm going to go to my spreadsheet. Man, I want to take trades like this. So I'm going to steal this picture, and I'm going to study it tomorrow morning. so that I can do what Luciano does. Follow the rules, take your entry, trust the 13-2 to lead the way. All right, Josh S., let's see what you did. Make me proud. Ho! You're testing my new LASIK surgery to see if I can read this stuff. 21.3 says clear skies. I don't trade a 21.3, but I like that you're looking. Market flow says odds favorable, nothing in the way. But these are the ones that I'm looking at, right? Odds favorable, no termination conditions. Josh, I don't think you could have taken a better entry. Josh is in on a 4 lot, right? He takes half of his profits as he gets back in here, money in the bank, and takes the rest of them way up here with that screaming momentum. And then Josh, why on earth did you go short? I'm going to praise you. And now I'm going to ask you, Josh, what made you fight momentum, direction? What made you go short at a blue line inside of favorable large triggers with odds favorable momentum? Okay, you were trying a PSO. So Josh, I like that you put that. So you're saying, and Josh, I'm not beating you up here, but I want you guys to go through this process in your head. You're saying that when momentum was screaming up, pivot, stop out. When direction was up, when smalls were up outside of the large, when the large were wide, angled in the direction of the trend, right? When all of my triggers here were up, when my smalls were outside of the large, Josh, you said that this one cute little break above a pink line is going to reverse the market in its tracks. Josh, this is one of the best mistakes that you can make, right? This is one of the best mistakes that you can make. Jim, it's okay. It's not a mistake. Well, I mean, it's a mistake, but it's a learning opportunity, isn't it? And this is similar to the one that we saw early. So Josh, if you're thinking pivot stop outs, if you're thinking, man, I'm going to let that great termination condition give me an opportunity to look for a short, let your pivot stop out be on a higher time frame, right? Let your pivot stop out be on that chart that dictates the overall temperature of the market. Let your pivot stop out be with the direction, with the smalls below the large. Because Josh, there are going to be opportunities for you to take advantage of those, but that 13-2 chart has to lead the way. That 13-2 really has to let you know that we've reached an area with so much potential. Yeah, this is a great one though. But what it did is it kept you out of that beautiful long. And you, Josh, can I show you how to use a pivot stop out on a small chart? When everything says up, guys, here's a great chart reading tip. Let me get all this nonsense off of here. When everything says up, when you have momentum, it's screaming, everything is great, and you get one of these pivot stop outs on your smaller chart, but everything still says look for the long, right? Often, when you get a pivot stop out here, Josh, look at what happened right at your area inside of favorable large triggers. You got a pivot stop out on the bottom. Do you see it? Pivot stop out from the top when everything says go long gives you just enough push to typically take out that previous. Well, it's still a pivot, right? It's just identifying. This is a pivot. And this is a pivot stop out. This is a pivot stop out of a divergence high. So when this happens at a key area on my 13-2 and changes the trend, it's amazing. But when the crowd says we're going up, when the crowd says we have momentum, I see this on a smaller, faster chart, and I still have odds favorable, right? It helps me identify where that market may continue from. And instead of entering at support up higher, I might say this pivot stop out is probably going to get me down to the midband. Exactly, Jim. 2 divergences, 2 losses of momentum, 3 divergences on the 5-1 chart may terminate a trend. 2 divergences, especially with strong triggers, may just push me a little bit lower for that entry. Does that make sense, guys? This is a nuance. This is something that you're going to recognize the more you study. So there's your window of opportunity. That second divergence, all it did was push us to the bottom of the window, right? Jim, you're going to be. I like it when you guys remind yourself that you're still learning, though. It never stops. Guys, I do market replay every week looking for advantages. I do market play every week fixing my mistakes. And I make mistakes. You're going to make mistakes, guys. It's a part of being a trader. It's part of being human, isn't it? So Josh, great second long. First short could have been a great long. And there you go. Paul, great trade. High probability trend trade, nothing in the way, odds favorable. No reason to not get in at the best of the best area. And look at that second profit target, letting the 13.2 lead the way. True story, guys. I get such a kick out of watching you guys grow with the software when I see you take these beautiful entries. And guys, look at this. Paul already collected 100. He's up nearly 300 in this trade. And the worst case scenario for him is that if this divergence prints, he exits with $170. The worst case for Paul on this trade is $270. Isn't that amazing? I can tell you guys, Paul's been studying. Paul's been posted in this room for the last year. New Trader, you asked if it was a gap pullback situation. Where were we talking about, New Trader? Because we haven't seen one. Are you talking about that pivot stop out? No, it wasn't. It was just, here's a pivot stop out. Josh, do you see it? New Trader, do you see it? There's a pivot stop out on a 13.2. Look where the triggers are. Look how the market reacted off that big chart pivot stop out. Pretty cool. And here we go again. Small chart pivot stop out. Comes right back to that previous pivot. I know which one you're talking about, but it wasn't, New Trader. So I went to where we do have an example. You ready? When we talk about that gap theory, guys, this is a way to identify when areas really have the potential to hold. Even from this termination condition, New Trader, do you see how price accelerates all the way to resistance? And these large triggers remain a full bar away. There's room for a full reversal bar before they make contact. New Trader, this is where, even with what we perceive to be odds favorable momentum, price is likely to snap back to those large triggers. This is how we use the gap theory. We use it to identify areas likely to hold. If price pulls away from the synthetic triggers too fast and too far, it's going to snap back to the triggers, just like it did right here. So we're looking for this phenomenon, if you'll call it, on the 13.2 chart, New Trader, to keep you from trying to go long before that vacuum, before that gap is filled. Does that make sense? And not just New Trader, everybody. This is how you can identify. Nope. So New Trader, let's see if we can find a live example for you. We don't have one currently, so I'm going to just grab a picture. You know I have pictures of everything, right? Price accelerates all the way back to the mid-band. Do you guys see it? It accelerates all the way back to the mid-band. New trader, you know that white bar on your 13.2, that reversal bar marker? If price remains above, or those triggers remain above the reversal bar marker, it means that this bar has room to make a complete bar before coming in contact. Go in the other direction. And this looks like what just happened here, right? Price accelerates all the way up to Fibonacci resistance, new trader. And those large triggers remain below that reversal bar marker. This is my cue to say price is probably going to close that gap. And I'm looking to see, there's another one, resistance. Large triggers remain below. So guys, this is a great pattern. And then new trader, that same thing that'll keep us out of a trade, that'll help us identify areas likely to hold. Isn't it the same phenomenon though? On the 5-1, price accelerates away from those triggers and snaps back. Same idea. And guys, when the rules are met, we can take advantage of that snapback on a smaller, faster chart if there's an area of support or resistance inside of favorable large triggers to get into the market. Awesome. Guys, everything we do is just patterns, isn't it? There's 3 divergence in the same location on a higher time frame. There's 3 divergence in the same location on a lower time frame. Does this potential termination condition negate the fact that we're into resistance with absolutely no triggers through? Of course it doesn't. So what has to happen to look for long trades, guys? Let's talk through it. Let's play if-then. If small triggers get north of resistance, if I have odds favorable momentum, if I end up with an area of support inside of favorable large triggers after the rules are met on the 13.2, well then I'll look for a long trade. But if this area holds, if these triggers roll, well then I have to wait for that odds favorable momentum to look for a short to the downside. Are you guys with me on this so far? So what are we watching? 3 divergences in the same location on a higher time frame may create a pretty big move to the upside, but we're still respecting termination conditions. Everything that you do will revolve around chart reading, guys. This class is designed to give you a foundation. This class is designed to just get you to the point to where you read your indicators. Price reaches a divergence high. How many trigger lines have broken through right now, guys? Give me a number in the room. How many of my small triggers are through that area? I'll take a picture so it stops moving. All right, see tricky? This is what I was hoping to see. Your small triggers consist of 2 lines. And both of these lines have got to be above that area. So tricky, that was the best answer ever. Safia, way to get with tricky on this one. Small triggers are not through an area until both lines of those small triggers get through the area. So right now, small triggers haven't made it through. One line of the small triggers has, but one has not. Therefore, guys, you're full-blown termination condition right here. Does that make sense? And then if I use my shape, guys, do you see how both lines of the small triggers have gotten above resistance? Now the small triggers have cleared this area, but they need to clear this area. Let's see if they did. So far, the small triggers still haven't broken through the area, have they? Now they have. Now the small trigger made it through. It's still 50-50 at best. It's the potential to break, but it certainly hasn't broken, right? Do you guys see that? The hardest part about being a day trader, guys, is doing absolutely nothing when your indicators aren't telling you that there's an advantage to be had. Guys, there's your gap theory. Price accelerates all the way back. Large triggers don't follow. I'm not saying that there was a trade to be had, but isn't that enough information to keep you from trying that short at the mid-band? Because what did price do? It snapped all the way back to those synthetic triggers, didn't it? Guys, that's not a trade, but that's a pattern. Jim, couldn't care less. I am so in the moment. Initially, I'm so in the moment. My only concern in the moment is what is the market doing now? Right now, it has odds favorable momentum. Right now, it has no termination conditions. And right now, I've got a perfect entry at an area inside of favorable large triggers. And we can take advantage if the overall market for the day, and guys, I think we can agree that overall the market's down, right, Jim? But boy, there's been advantages. There's been opportunity to make money up. And there's been advantages and opportunity to make money down. After a long run like this, I'm more cautious about longs. I'll wait for it to fully reverse. I'll make sure I'm not trading into areas. And the market may continue back down, right? But in the moment, I've got to take advantage of what I see. And that gap theory kept me safe, right? I need this area to break if the market's going to continue the downtrend, or the triggers are going to roll and they're going to try and get back up here to 75.39. That's it. Be in the moment. Can we still say we have odds favorable momentum when the line... Now, D, can you say it's a duck if it's actually a chicken? How could I say I have odds favorable momentum if my trigger lines aren't telling me that I have odds favorable momentum? I can say it, but I'd be lying to myself, wouldn't I? I love it. This is one of those things, and D, man, no, it's okay. You're asking the best questions ever right now. You really are, because everybody else is wondering. You got the courage to say it. So, odds favorable. The only time I can say I have odds favorable momentum is from that point where the small accelerate away from the large, create that gap. And D, I'm going to stick with that advantage until the small return. And you notice how that circle happens during that odds favorable? Heck yeah. That's our look. Here, we can say that we had small below the large, right? We had large down. So first glance says, hey, look, I have odds favorable momentum. But when price reaches that mid-band and it reaches support and those large triggers don't follow, well, now I have a termination condition. Now I have an area likely to stop the market. So even with odds favorable, I'm not looking for the short. Because of that gap theory, I'm not looking for the short. And because these guys in the market absolutely love these Fibonacci areas that John Novak has come up with, this algorithm that he's produced, I can say to myself, as I grow as a trader, that if price is likely to close the gap, maybe eventually I'll find an opportunity to take advantage of closing that gap. So D, that retracement that you were talking about earlier to get back to the mid-band, this is a look that maybe you can identify as you grow with the software and find a way to take advantage of that gap theory. And then you know that your trigger lines are the first stop. You know that your divergence high is the second stop. And you know that when price doesn't reach a key Fibonacci area and gives us this look, a lot of the time it likes to finish the move up. It's never guaranteed, but we can create expectations through patterns, that pattern repetition. Does that make sense, Jim? Does that help a little bit? So guys, if the smalls are below the large, the background is red, do I have odds favorable momentum? Smalls are green, large are green. Do I have rule number one met in the moment for my high probability trend traders? Nope. So what's our job? If the only trade in our plan is a high probability trend trade, what's our job? Our job is to sit on our hands, right? And wait for an advantage. Our job is to study this look and study these patterns every day so that we can grow into traders that maybe have other options. Maybe there's another trade to take. But in the moment, we're learning to read charts. You guys are doing an amazing job of it too. 50-50 trade, right? Smalls are above, large are below. There was actually one where 50-50 price didn't reach the mid-band. And it pulls back to not quite there, maybe. But now we're 50-50 on the one-to-ones. We've reached the top of the window. We can identify the bottom of the window. But it's a 50-50 with a loss of momentum, right? Medium probability trade, guys. Manage it assertively. Where are we coming from, though? We're coming from 4 divergences that create a full reversal that gives us odds favorable momentum. What's it look like when a trend reverses? It looks a lot like that, but we still don't have a clear path. I don't know, D, are your rules met? I don't have any areas at 63. 39.63, D, is up above everything. What direction are you looking to go? Okay, so our pullbacks, I love it. Our pullback, D, starts with this reversal bar down. If you're looking to go up, we're not looking to go up all the way here. We're looking to go up off of that small retracement, right? We're looking to go up at that area of support inside of favorable large triggers. But if this is a trade that you're considering taking, you sure have to understand that I have one-to-ones that haven't broken completely. I have a divergence high that hasn't broken completely. I have an area of resistance that hasn't broken completely. So I'm no longer in that high probability scenario, right, D? But if that medium probability trade is going to work, it's going to work from the pullback to the areas inside of favorable large triggers. Does that make sense? And I think that you're reversed a little bit, D. You're looking for the pullback the wrong way. It may have. A train might also come plowing through my wall. But in the moment, it has momentum, right? We're trading in the moment. Right now, I have odds favorable. But I don't have high probability because these areas haven't broken yet. New trader, I've dedicated 2 years of my life to learning to read my indicators. Guys, day trading isn't something you do for 30 days, get filthy rich, and then shut it off and retire on your island. Day trading is something you're going to do for the next 20, 30 years. And every day you're going to get a little bit better if you go through the process. What do I see? What are my advantages? What are my disadvantages? How am I going to manage this trade if I take it? If I took this 50-50 trade from the top of the window at 58.34 or 58.25, guys, I've already made $100 on the trade. I'm already at break even. And this market either goes to where it's likely to go with that momentum if the area breaks, or I have a reason to exit the trade. Does that make sense, guys? Medium probability doesn't change the fact that we can identify where it's likely to continue. Medium probability doesn't negate the fact that I have odds favorable momentum. The only thing medium probability does is it says that my chart reading is good enough to identify that this area hasn't broken yet. And because it hasn't broken yet, I know that I have to use my chart reading to manage the trade. It still hasn't broken yet, right, guys? So my management may say that if divergence prints, which I'll know right about here, well, I'll exit that trade for a small profit because now I have 2 divergences on a smaller, faster chart. Now I have two divergences on a smaller, faster chart. John had his target in there. It didn't hit it, so he exited the trade. Beautiful entry. Perfect exit. Guys, that is $200 per contract worth of profit right there on a medium probability trade. Cost you a point, 375, 187.50. Sorry, I rounded. And now you get that second divergence, right? Now you say to yourself, all right, I'm losing momentum twice with my trigger lines inside on an area that hasn't yet broken. My chart reading said I had momentum. My chart reading said I had multiple divergences pushing me up. My chart reading identified the trouble spot, and my chart reading gave me a management opportunity. Guys, that's all it is. How long does it take to become a master? That's up to you. Do you want to sit on the sidelines and listen to me every day and hope that it absorbs? Or do you want to go back? Do you want to take pictures of these termination conditions? Do you want to go back and identify odds favorable momentum? Do you want to practice entries so much that you enter trades without hesitation, without fear, without anxiety? That's all we do in this classroom, guys. If you're a Nexgen user, congratulations. You just bought the world's most sophisticated elliptical. I'm going to show you how to turn it on and set the timer. You have to learn to use it. You have to do the work to get onto it. Racha, you're seeing different chart patterns. Let's see what that means. Let me open up your picture. So Racha, there's a lot of questions that we talk about when things don't quite line up. Are you looking at the same market? Was I looking at crude and the ES? Trade your charts, right? That's the biggest thing, is trade your charts. Sometimes, Racha, this is my order of operations when people say that we're not the same. Do you go through, where is it? Your daily computer performance. Do you go through and delete the cash and tick every morning and make sure? And then there's the NinjaTrader 7 version. John runs 7 and 8. But are you going through every day, Racha, and clearing out your cash and tick? Because that can make a difference. Okay. Are you clearing out the cash and tick every morning? The high performance? Nope. So that may be part of it. There may be some data in there that's a little bit different, creating a little different areas. Other things that may happen, Racha, do you close out every night? Do you close out NinjaTrader, or do you let it run? Some people let it run. You close it out? Okay, and that's a good thing. Ideally, and there's John going through it again, doing that clean out every day. That's a big part of it. And I rebuild. Yeah, and I never skip that one either. And every weekend I go through and I rebuild. So there's little data discrepancies that can change the way something looks. I always say trade your charts for sure. Right to the termination condition, guys. Beautiful, isn't it? Trade your charts. And Racha, you had a beautiful look there on yours for sure. Jim, you are new here. You always gone back to look at the day's trades, but you've never taken pictures of your trades. Oh man, that is one of the best. So Jim, do you have your capture software opened up? God, can I tell you that I have like taken no breaks this week because you guys are keeping me busy and I love it. So Jim, you should have capture. When you downloaded the software, they should have given you capture software. It's just part of the installation process. Or do you have Snagit? Because there's really two. There is, whoops, that was Skype, not Snagit. There's Capture, which is the free version. No worries. So Jim, try this real quick. Go to your search button. You have the software. You've downloaded the software, yes? just go type in capture real quick, and you'll probably see it come up because it's a part of the installation. It's funny, every time I rebuild charts and rerun the installers, my capture software pops up. Take a look real quick, see if you have it. And if you don't for some reason, no worries. Let me give you the link to download it, and it literally takes, I would say, about a minute to make this happen. You can just hit free download if you're using Windows, which of course we all are. Do the Windows download, and it'll give you the setup exe. It took me that long to download it, and if I click that exe, it's going to run me through a couple things, and then I'll be installed. It's really that fast. And then once you have it, it's as simple as taking a picture. This big red button, if I click it, if I hover over just one of my charts, it's only going to take a picture of one. So what I encourage you guys to do is left click on your 13.2 and drag it all the way down to the bottom of the 5.1. And then when you release it, it's going to give you this camera that says capture an image. And then once you do, Jim, this is how you and I are going to have a conversation every day. And you can use arrows. And what you can do is you can take that arrow, you can take that shape, right? Kind of put things together. But the most important tool that you guys can use as a new user is the call out button. This is where you're going to write your rules. And this is where you're going to talk about your entry, what you see if it's not a trade. And guys, I love this one. What you feel. Are you nervous? Are you confident? How do you feel going into it? And then once you get all this from the free stuff, Jim, click upload. And it's going to send it to the cloud. It's going to send it to that screencast cloud. You hit copy. And you can paste it right in the room and we have this conversation. So if you need help with that, let me know. And then once again, if we go to the instructions, and I know it's crazy, but I love to go to the instructions. I've got like 3 grills that have never had enough parts or had 2. Termination condition, right? Does everybody see it? Price reaches an area of resistance. Absolutely none of the trigger lines break through. Because none of my trigger lines have broken through, rule number 2 is not met. This is not a high probability trend trade. I've given away the advantage of a clear path. I'm also at the tail end of momentum. If it hurts, bleeds, or costs us a fortune, go find the rules. I like it. So Jim, let me know if you end up needing help with that. I'm more than happy to help you guys with that. Whoa, what's crude oil been doing? There's that gap theory again, guys. Do you see it? There's that gap theory. Actually, they've just been stuck here, haven't they? Since the last time we looked at it? Or did we get a gap theory down here as well? We sure did. Look at that. There's that gap theory. Right to resistance, the trend continues, odds favorable momentum, everything goes up. There's that gap theory again. If patterns repeat themselves, well, I have to know that this one has the potential to go to 76.36, right? But I'm not fighting momentum. But maybe one day, if you study that gap theory enough, you may say to yourself, there's an opportunity for me here. And John, you say why no one should trade their money when they start. Trade someone else's money. Make money. Then you can start trading your own. It's the cheapest option for learning to become consistent that you will ever come across. And what John's referring to, for those of you that are brand new, for those of you that are on the brink of going live, straight from the educational page, guys, there's Apex, Elite, Top Step. For a monthly fee, they'll put you through a combine. This combine is designed to make sure that you can follow rules, that you can be consistent, that you can be profitable, that you can not blow out accounts. And when you pass their combine, well, they fund you. And they typically give you 90%. They'll keep 10%, right? And Apex is doing 50% off right now. D, I'm not sure because I don't work for Apex. But if you click on that link that says Apex and follow it from our page, and I believe there may be some sort of great thing, but there is the link to Apex, just one of them. There you go. John gave you the link. Click on his. And then if you go to sign up, look at that. It talks about the costs, what you're controlling, your thresholds, all of these. And it's 50% off right now. Safia, it's just a test. It's like doing your rounds as a new doctor. It's a test to make sure that you can control yourself, that you can follow your rules. So Safia, when you think you're ready to go live, when you've practiced, when you feel great about it, rather than putting all of your hard-earned money, you can go to Apex and you can use their hard-earned money. Other people's money, right? What an amazing opportunity for people. Exactly. Safia, you could put $10,000 of your money into an account and trade it live, trade your money, or for $80 a month, if you pass their test, they'll give you $50,000 worth of capital to work with. Isn't that amazing? It's the same rules. And rather than you losing $2,500 of your own money, if you get all crazy, you lost the $83.50 that it took to get you in there. And you get a ninja license. Other people's money, guys. I was like, ooh, that's a picture. That looked good. You're welcome. Divergence high. Absolutely no trigger lines have broken through, right? You guys see it? Why do we respect? Because this is an area that may reverse the market, as it's doing right now. John, how did the bot not get you for asses? OPM, you're immune. I love it. Guys, what do you want to talk about? We've got a few minutes left. I want to open this up to my demos. To you guys that are still in your first 30 or 60 days, is there a concept that you want me to cover one more time before we go into the weekend? Is everybody comfortable? What are you going to do this weekend, guys? You're going to study. Whoops. You're going to scroll back on your 13.2, and every time you see odds favorable momentum in a tail, you're going to circle it, right? You're going to start that process of recognizing odds favorable momentum. You're going to start recognizing no termination conditions. And if that circle shows up at an area inside of favorable large triggers, well, now you're studying that best of the best entry. Guys, doesn't cost any money to scroll back like this. Maybe you're scrolling back and you're like, hey, look at that termination condition. Josh, you might say, oh, there's one of those pivot stop outs. This is why I respect that line. No problem. Christina, enjoy your weekend. I got you, Jim. We'll do it together in 1 second. Let me answer Safia's question. Safia, you say, what's going on? Your mind gets confused when you see it. Safia, can I ask you a different question before I talk about this one? Are your rules met on a 13.2 chart? Do you have odds favorable momentum and do you have no termination conditions? No? Then, Safia, who cares what's happening on the 5-1? All you're doing right now, this is the S&P. All you're seeing when you look at that, Safia, is a fight between buyers and sellers, right? That's all the market is. Make it easy. It's a fight between buyers and sellers. I don't have rules met. Remember, this is a smaller, faster chart, right? When they're fighting at key areas, you just see it more on a smaller, faster chart. It'll make perfect sense when the rules are met. Pivot stop out. New trader, what are you worried about? Why would you worry about anything? New trader, are your rules met for a trade? Watch how we do this. You don't have odds favorable momentum, right? You don't have a clear path either direction. Okay. New trader, did you have two divergences right here? Nope. So no reason not to take that great entry, right? New trader, if two divergences worry you, exit when the second one prints. But guys, that's a powerful word, isn't it? Worried. Why are you worried? You worried because you don't have any expectations of what may happen when that happens, right? Your chart reading isn't there yet. Guys, worried gets replaced by, if I see a second lower divergence and my small triggers are inside, I'm just going to exit the trade. Or worried may be replaced by, when I have this strong of a look from a good termination condition and absolutely nothing in the way, and that second divergence prints, but my small triggers are rocketing up, man, I'm going to keep my stop in place because the odds are still favorable. New trader, your repetition and your practice is going to replace worried with this is what my indicators say, and this is my plan. Does that make sense? And worried is a very normal, natural feeling right now because you're not there yet. You're brand new. Let yourself be. Guys, you only get to be new once. Embrace it. Sam, beautiful. Odds favorable. Clear path. Perfect entry. Exit. Exit at resistance. Beautiful, beautiful, beautiful. Sam. Sam on his 13th day. Jim, you will. That's up to you, right? Just keep the path. Post your pictures, ask your questions. Are you ready to download it together, Jim? Feels good, doesn't it, Sam? And Sam, I'm going to ask you, with this much momentum, were you nervous? With a clear path, were you nervous? Being able to identify your entry, were you nervous? Or did you say, you know what, this market's paying me all the way to that next fib? Great job. All right, Jim, let's do it, brother. So I am going to, let's go back real quick to the page. I'll give you the loading link again. So there it is. Download the free Jing trial. So when I click on that link, it's going to bring me here. And I'm going to hit Windows Download. And once I do, you'll see down here in my download bar, up comes the Setup EXE. Nice job, Sam. You with me so far, Jim? I'm going to click on that setup. And it's going to bring me to the license agreement. And I have to accept it in order to proceed. If I don't click yes, it's not going to let me keep on. Because they want to know that my lawyers and I have scoured over every word of this license agreement to make sure that there's no misconceptions. But once I say yes, they're very comfortable letting me hit continue. And then once I hit continue, it's going to start that process Okay. So let's see. I hit continue. And after I hit continue, this popped up on my other monitor. I'm now loaded. And I think that what may get you, Jim, is it doesn't give you any big bells and whistles saying, ta-da, you did it, congratulations. It just kind of shows up. So if you go to the search bar, you should be able to find it. Or if you click on the window and click on all apps, it'll be in alphabetical order. You should see that TechSmith in there. Did it work for you? Fingers crossed. And ladies and gentlemen, this is important stuff. Being able to take pictures is important stuff. This is exactly what this classroom is for, is to make sure that you guys can do what you need to do. There's that darn support, doesn't want to give up again, right? Those buyers are still trying to make it, but I haven't had any rules met yet. Jim, did it show up for you? All right, so I'm going to send you to my ringer then. You go from the main Discord page, Jim, just go down to Jason and create a ticket real quick. Whatever's broken, whatever's stopping it, whatever's keeping it from coming up the way it should, Jason will have it fixed in a matter of seconds. He's unbelievable. And he takes amazing care of our clients. Just hit that create ticket right from the Discord page, and he'll get you squared away. And then practice taking pictures over the weekend. And then Monday when you come to class, by all means, feel free to post 5, 6, 500, whatever you need. Maybe not 500, but you know, feel free to post. And you'll be good. Sorry I couldn't fix that one for you though. I wanted to. But sometimes it takes somebody hopping on your computer or somebody with a little more experience than me. Guys, it has been an absolutely phenomenal week. I hope you guys feel the same. Perfect. Guys, this is the same classroom every day. I come in with the same thoughts in my head every day. I'm going to talk about momentum. I'm going to talk about termination conditions, and I'm going to talk about areas where the market is likely to continue. We're going to reinforce lessons. You guys are going to show me your study through pictures. I'm going to give you feedback, and we're going to repeat this process every day of taking pictures, understanding concepts, and the only goal for your first 30 days is to find those great entries, right? Because those great entries make trades manageable. And then after that first 30 days, guys, you're going to go from that high probability trend trade. Let's find my stuff. Let's go to the glossary. Your first 30 days is focused on having every advantage, isn't it? Making sure that everything lines up for the trade. Guys, the more you grow with the software, you're going to start being able to gauge risks a little better, right? You're going to start to be able to gauge problems, potential problems. I was talking to somebody once. We were talking about just parallels in life between trading and things we do. When I learned to snowboard back in my early 20s, the mountain that I was at more often than not was Loveland, Colorado. It was inexpensive. It was pretty close to where I lived. And there was a blue run that the chairlift got off at. It let you off right at this blue run. And guys, I used to get off of that chairlift and plant my butt in the snow and buckle my bindings and make sure they were tight and look down what was the scariest freaking mountain I've ever seen in my life. And that was day one. By the end of the season that year, I would get off of that lift and I would start snowboarding down the mountain as I buckled my binding. And I would be 100 yards into this blue run that used to terrify me, just going through routines, going through the motions. And trading is similar. It's going to be a little terrifying in the beginning. It's going to be a little overwhelming. It's going to take you a minute to get your thoughts together. But through repetition over and over and over, you're going to put yourself in a position where a lot of the things that you have to think heavily on now become second nature. And that comes through the repetition. That comes through asking for help. That comes through market replay. Anybody can do it, right? Anybody can do it if they put the work in. Let's put the work in, guys. And I think that's it for me. I think you guys have torn my voice up this week, making me talk. I love it. We've seen real market examples. We've seen historical examples. Zeba, if you're with me, good job. First week posting pictures. Safia, doing great work. Dee, great lessons. Josh, awesome lessons. If I forget your name in this little shout out, I apologize. But you're all doing amazing. Just because it's difficult today doesn't mean that it has to be tomorrow. Keep doing what you're doing. And one day, you'll take your ability to read charts and maybe you'll be doing what Ron does. Odds favorable, clear a path, and just keep making money. Great job. Be the shark, guys. Don't be the guy that tried to be first. See Gary's picture? That's what happens when you try to predict the market. The sharks get you. I was on an offshore fishing trip once and a grouper did that. Had a redfish on the line and this big grouper came up and ate the redfish and refused to let go and they pulled the grouper into the boat. It was kind of funny. Guys, that's it for me. Have an absolutely amazing weekend. Get some study done.